How you doing? My name is Wes Hanley. I work for the Oregon Savings Growth Plan, and that's the 401k for state employees around the state of Oregon, basically. I cover the southern half of Oregon. I actually live here in Klamath Falls. I am a licensed financial advisor. This is my 28th year of being a licensed financial advisor. And I've taught a class on basic investing since the early 1990s. And what you're going to hear today in about 45 minutes, we're going to try to condense about 3.5 hours in 45 minutes. So we're going to try to run through this. If you have questions, feel free, raise your hand. There's no such thing as a stupid question. Hopefully some of this information you can take with you for the rest of your life, because one day you're going to graduate, you're going to go to work for a company, that company's going to offer a retirement plan. They're going to offer something called the 401k, or something called the 403b, which is a nonprofit version of a 401k. Across the street where my wife's a registered nurse at Sky Lakes Medical Center, the hospital is considered nonprofit until I get the bill. She has a 403b account. 457s, city, county, state government, they all work the same. You staff here at OIT and other public universities in Oregon, SOU, University of Oregon, etc. Professors, classified, unclassified staff have access to a 403b and a 457. They can do both. These are retirement plans, but before we get into any of that, it would be kind of helpful to understand basic investing, i.e., what is a stock, what is a bond? Anybody know? Pick a staff. What is a stock? What is a bond? Share in a company. Yes. Yes. Very good. Thank you. A share in a company. What is a bond? Anybody know? Say what?
Like a small loan.
Yeah. Bonds a loan. So there you go. Stock is ownership. Bonds are a loan. Stock is ownership. Bonds are a loan. So let's say I got $10,000 burning a hole in my pocket, which I don't. And I don't need the money for a while, so I want it in something safe, right? So maybe I'll turn around, maybe I'll get a treasury bond, government bond. I'm not talking about the savings bonds that grandma and grandpa bought me back in the day that, you know, said $100 on it. If you hang on to it long enough, it's worth $100. I'm talking about a U.S. Treasury security. And a U.S. Treasury security is issued by the U.S. Treasury. They're called Treasury bills, Treasury notes, Treasury bonds. It's a $10,000 minimum, right? Now, when I was a rookie stockbroker in L.A. back in the day, we would trade 50, 60 of these a week, and we'd make a little money doing so. Now you can go online, treasury.gov, do it yourself, that sort of thing. Right? But let's say I want something safe, so okay. Let's say that 10-year Treasury is paying 2.8%, which is actually a little bit more than that right now, but let's say 2.8% in interest for me per year for 10 years, okay? So, all right, I'll do that. I'll pull the trigger. I'm going to go ahead and buy that 10-year U.S. Treasury, okay, paying me 2.8% per year for 10 years. I spend $10,000, I do it. What did I just do? By doing that, by buying that 10-year Treasury, what did I just do? You say what?
You made a loan to the government.
You made a loan to the government. I just lent $10,000 to the United States federal government. You know why? In God's green earth would I want to do that for? Say what? Yes, they're going to have to pay me back. Are they? Good answer. The U.S. Treasuries are considered the safest investment in the world. Institutions, pension funds, other countries, they'll buy U.S. Treasuries. It's considered the safest investment in the world. And there's one reason why. Anybody know why?
U.S. military?
It's backed by the government.
Yeah.
Full faith and credit.
Full faith and credit of the United States government. What else? Anybody? What does the United States Treasury do? Thank you. They print the money. They print the United States dollar. And who else, other than that thing I got going on in my basement up in Moena Heights, who else prints the US dollar? Right? Think about it. So, in essence, they'll always print enough money to pay you back. Does that make sense? Safest investment in the world. Why? They print the money. Does that make sense? All right. So, amazingly enough, the company that I work for gave me this Ford to drive, this Ford Fusion. Now, Ford needs to raise money too, and big companies, Fortune 500 companies, they don't borrow money from banks necessarily anymore. They borrow money from capital markets. In other words, they issue bonds, right? Sometimes called corporate bonds. So Ford is issuing a 10-year bond paying 4.5%, let's say, okay? So 10-year bond pays 4.5%. All right, I'll pull the trigger on that, I'll buy that. What did I just do?
You loaned Ford.
I lent $10,000 to Ford. Now, does Ford print the money? No, they don't. So they're gonna have to pay me a little bit more interest in order to entice me. So 4.5% versus 2.8. Does that make sense? So it's backed by the full faith and credit of Ford. What's the risk? Say what? Yeah, would Ford go out of business? Is Ford gonna be around in 10 years to give me my money back plus pay interest the entire time? Does that make sense? Am I willing to take that bet? Would you take that bet? Would you? I mean, the Model T, for crying out loud. They've been around for a long time. So yeah, I think Ford's gonna be making Broncos and Fusions and everything else for the next 10 years. So I'm gonna take that bet, right? I'll buy that Ford bond, 10 years, 4.5%. Now, I know most of you in this room have devices. Bono said these are dangerous little devices. Actually, they've gotten bigger. My wife got me this a couple Christmases ago. It's an iPhone. She said I didn't get in the 21st century, quote unquote. But I don't know if you can see this on here. It's called What an App. Can you see that? It's called What an App. Can you see it? What an App. Oh man, this thing does everything. Are you kidding me? It's What an App. Anyway, What an App is also raising money, and they're selling 10-year bonds paying 22% interest. 22%. Where do I sign up?
You don't.
You don't. What's the risk?
They probably won't be around in 10 years.
You won't make that phone anymore. In the company or the phone itself?
No, it's an app. What an app?
Oh, just an app.
Just an app.
Okay.
So what's the risk? Is What an App gonna be there in 10 years to pay me my $10,000 back? Plus that 22% interest per year every year for 10 years. I mean, think about it. It's an old Latin term, caveat emptor, buyer beware. Or in other words, if it sounds too good to be true, it probably is. So in all three cases, I lent my money to the United States Treasury. That's a government bond. I lent my money to Ford. That's a corporate bond. I lent my money to What an App, a junk bond. Now you know. By the way, there's no such thing as What an App. I made it up. In all three cases, what did I do? I lent my money. I bought bonds. I lent my money. Why would I want to do that for? Yeah, for the interest, right? And bonds are supposed to be boring, right? They're not supposed to be very dramatic. You're kind of like watching parking meters. In other words, give somebody a set of money and eventually you get the money back plus interest. That's the whole idea of loaning money, right? And that's what bonds are. Does that make sense? Question? No? All right. So in the early 1990s and 1993, before we get to that, hold on, government bonds, corporate bonds, we talked about that. Here's your ratings. Where do you think the government is? AAA. Actually, they're AA today. Yeah. Where do you think Ford is?
Triple.
Probably a double or an A.
Probably AA minus, something like that. Where do you think What an App is?
A D.
Yeah, for default. You can't fail. There's no such thing. D, default, means they stop paying you and your money's gone. That's how it works when bonds default. Means the company went belly up and so did your money. Does that make sense? Right? Questions? Okay. So in the early 1990s and 1993, there was this kid who moved from Los Angeles to Eugene, Oregon. Kid had hair back in the day too. Anyway, so the kid goes in, works for this bank called Washington Mutual, and the kid goes into a Costco. And I'd never been in a Costco before. And I can't find a place to park. I'm elbowing people out of the way. And I'm in this warehouse in Eugene, and I just had this out-of-body experience. And I said to myself, I gotta get a piece of this. I wonder, is Costco publicly traded? In other words, does Costco sell stock to the public? Why, yes they do. And in 1993, or maybe it was 1994, I bought 100 shares of Costco at $16 a share. By doing that, by performing that transaction, what did I just do?
You bought some ownership in the company?
I bought ownership in the company. I'm now part owner of Costco. I didn't lend them money. I bought part of Costco. I'm now a part owner of Costco. And my 100 shares means I'm a 1/1 billionth owner of Costco. But hey, I can go to Seattle once a year and go to the shareholders meeting and have that free Kirkland wine and cheese. Now, what happens if Costco doesn't do so well? Yeah. How many people have ever heard the term the Price Club? Anybody? So the Price Club was Costco before Costco. In fact, the management of Costco came from the Price Club, and they were basically in California. If you know how you go into Costco, and you go and you get your eggs and your butter and stuff, and there's these nice big glass doors, and you open the door, you get your eggs and your butter, your frozen stuff, you put it in the basket, nice big aisles, everything's clean. Back in the day in the Price Club, when you went to get something out of the refrigerator or frozen section, there were these plastic slats that came down. You'd have to fight through it. They're like blinds. And you had to fight through them to get your eggs or butter or whatever it was. And it was always so romantic because it was always located next to the tires and the motor oil. If I have really ratty stores that nobody really wants to go into, right? My merchandise is what happens to the value of my company? Right, goes down. What happens to my stock price? Goes down. All right. Juxtapose that with this. #1 seller of toilet paper in the United States, Costco. #1 seller of paper towels in the United States, Costco. #2 in wine, #6 in jewelry. If that's Costco, and it is, as I build more warehouses around the world, what happens to the value of my company? What happens to my stock price, my ownership? What does it do? Goes up.
More people want it.
Yeah. Where do you think Costco sells today per share?
I'm thinking about it.
Anybody take a guess?
1,000.
Oh, yeah, I wish.
What's the cap on it? $186.
You mean what's the symbol? Because everybody's got
No,
their phone
the-
out right now.
The
The market cap?
the number of shares, yeah.
Number of shares, I don't know. I don't know what the float is.
Hmm.
But it's considered a large company today. We'll talk about that. $151 a share last I checked.
It's 186 now.
I'm sorry?
It's 186 now.
180, wait, hey. When did I buy Costco? 93, 94, I forgot, you're right, which year? How much did I pay for it? $16 a share. But how many years ago was that? 24, 25 years ago, it was. So what's the takeaway? And this is a takeaway for life, not just for stocks. What I own, whether it's 10 acres of dirt, whether it's a house, commercial buildings, stocks of companies, whatever it is, what I own has the opportunity to create wealth for me over time. The key word is time. What is time? 5 years, 10 years, 15 years, 20 years. Why? Because it's going to do this. That's why. Is it guaranteed? No. Is it FDIC insured? No. Can it blow up in my face? Yeah, it can. but that's the risk I take for the reward I want. No risk to your money whatsoever. I've taught this over the years. No risk to your money whatsoever is a government guaranteed something. Bond, bank account, something. If I want more reward than this, I have to be willing to take a risk. What is risk? Risk is my money doing this. But what I own has the opportunity to create wealth for me over time. The key word is time. Does that make sense? Question? So bonds are a, what is it? A loan, and stock is? Very good. You've almost graduated from the West Hanley School of whatever. So, I can get large companies, small companies, mid-sized companies. Small companies is kind of like what an app, or it's almost in the most simplistic form. Who are three people sitting in a garage right now waiting to come up with the next big thing? What's the risk? Maybe they don't. What's the reward? Maybe they do. Right? Who's the next Google? Who's the next Facebook? Who's the next Costco? I don't know. That's what small company and small company funds tend to invest in. Mid-sized companies, here's a good one, Stanley Toolworks, Smucker's Jam, Nordstrom's, are all considered mid-sized companies. Household names, but they're not like Walmart. They're